Thank God for Zoom. I swear, I wish I had known about this ahead of time. I would have bought stock. I'd be rich. I'd make so much money, I could hire both of you to come and work for me. How's that?
Nice.
Yeah. I never had a Zoom meeting ever before this. Did you guys?
No, Zoom is great.
No.
No, I know. Now that I have, it's like board meetings. I'm going to drive an hour to a board meeting. Never again. Never again.
Yeah, so now I'm proficient in Zoom, WebEx, Teams,
Right?
Skype, Google Meet, done them all. I have all the apps.
Amazing. And I've done presentations on them too. So I call up Steve ahead of time. I'm like, Steve, there's this new one I've never been on. Where's the button to put my thing up on there? My PowerPoint. Where's the button? He's like, every single one of them is completely different. You have to search for the things. So we are at 3 minutes past 3. Hello, everybody. I want to thank you for coming here today and joining us for this wonderful webinar. We are very honored to have two extremely important people who are extremely important through this coronavirus. Wendell Davis from the SBA and Joe Ercolano, who is the state director for the SBDC. And Wendell, you represent 3 states, I believe, Connecticut, Rhode Island, and Massachusetts. You're a regional guy. You have
keep going. Keep going. All of New England. All of New England.
All of New England?
Yeah.
Oh man, it's just so you have like 6 times the headache of Joe. So today we wanted to bring you back and talk to you all and have you answer questions on mostly the PPP, because now it is time. People have received their money, and even though they knew ahead of time what they were supposed to do with it, there's lots of questions about, well, what exactly can I do with it? And I didn't get it when I thought I was going to get it. Situations changed a little, and so they have a lot of questions on that. I'm going to open up for both of you to say what you'd like as an intro, and then questions, which I have quite a few. If any of you are listening out there, you can put your questions in the Q&A box and in the chat box. This is mostly going to be answering questions rather than giving you a full-blown presentation on material that you've heard before. So Wendell, I'll let you start.
All right, Diane, thanks for the introduction, and thanks for this opportunity to speak with folks in Eastern Connecticut. Are we getting all the way up to the quiet corner, or are you more? Yes. Oh, great.
Yep.
I think this is the appropriate time. And I think given that we've gotten through round 1, what I call round 1 of the PPP funding, and now we're just over halfway through round 2 of the PP funding. I mean, I think it's appropriate to ask the question, did the PPP program, did it hit its mark? And the most recent data that we've seen just last week that we were given, I think the news is encouraging. And it points to, yes, it is hitting its mark. And for me, it's hitting its mark if it's getting to small business America. So there were 2 really important takeaways, I think, from the most recent data that were received. The first is, that average loan size in round 1 was right around $207,000 per loan. That has come dramatically down in round 2. And we were at $79,000 per loan. And that was last week's data. And if you fast forward today, it's right around $73,000 a loan. And that tells me a couple things. One, our community lenders, our credit unions, they're getting into Main Street USA, the smallest of the small businesses that are out there. And when you look at you drill into some of that macro data, notwithstanding some of the high profile media reports we've heard about the Shake Shacks of the world and the LA Lakers and those folks, when you actually look at the data, what you see is, and this round 2, 2.2 million applications were approved. Of that, 1.5 million of that, 70% were for loans of $50,000 or less. If you back that or push that up to 150,000 or less, 90% of the loans are $150,000 or less. When you look at the overall macro subset of the folks getting 5 million or more in round 1, that was just 4,400 applications that were approved. In round 2, it's right around 1,400. And that's out of a total of about 4 million applications. So those high profile folks, it's just not what's happening when you look at the real data. The second big takeaway that I think is important is that we still got money left. And I think, you'll recall in round one, and I know you didn't enjoy this, but that was a race. I didn't enjoy it. Joe on the line at the SBDC, those folks didn't enjoy it. And certainly small businesses did not enjoy that race that we had in round one. And it's clear now that has plateaued. The demand has plateaued. We have about 125 billion left as of last week. And the good news even on that amount is that over the last 7 or 8 days, that's only come down about 4 or 5 billion. So we're at about 120 or 119 billion, which you can do the math on that. We have some runway now. And with that time, like I've asked our district offices and the district directors throughout New England to take a deep breath and let's make sure now, let's do our outreach. Let's do it with intentionality. Let's make sure we're reaching the underserved communities and those folks that maybe, haven't applied yet, or for whatever reason, they're not getting picked up by this program. So we've had the opportunity to do that. We're doing lots of webinars now, trying to get out there to talk about, that we still have some room here. That backlog that hit the media also, that is gone. So I had all my district directors poll the lenders throughout New England. There's not one single bank with a backlog in terms of waiting for approvals from the SBA. So that's good news. We're seeing more and more banks saying, hey, we've gone through our existing customer base and now we're doing, quote, prospect lending. They're getting out there and they're processing applications for clients that they don't have an existing business relationship. So I think those are all good things. That's all good data. Let me just give you one macro data point too, and then just some context for that number that I'm about to give you. So in Connecticut alone, through round one and round two, it's been $6.7 billion worth of loan approvals. And, that's a staggering amount. And, it's kind of like a double-edged sword because, I'm excited that the small businesses in Connecticut are taking advantage of this program. But at the same time, what a sobering number. I mean, the dramatic impact that this COVID-19 is having on small businesses, I mean, this is just devastating for these companies. And let's put it in perspective. On a good year in Connecticut, the SBA, through its flagship 7A program, they would do about 240 to 250 million a year. And we reach about 700 small businesses, and that would be a great year. So that's a whole year. Now, contrast in the last under 30 days, 6.7 billion, 48,000 small businesses. Again, sobering numbers showing, just showing that impact of the COVID-19. And without all being said, there's still work to do. We understand that, and we're doing everything we can. And we would enlist your help too to help us reach as many small businesses as we can to take advantage of this program.
Thank you very much. I don't have any questions specifically to what you were saying there because most people want to ask you questions about the PPP. But I'll let Joe, do you have anything that you want to say?
Yeah. I want to thank you as well, Diane, for the opportunity and for all the great work you've been doing. You've probably put on more webinars than any other chamber in the state, and they've been very good topics and they've been very much on point. And we appreciate that outreach because it's hard to reach the 267,000 small businesses in the state of Connecticut, whether they're employer businesses or self-employed, because self-employed can benefit from a lot of this relief as well. And you're doing a lot of great work on that regard. So thank you. Also, I wanted to mention and echo what Wendell said. We've seen a lot of success amongst the folks who have come to us for support. We picked up over 550 new clients in about 7 weeks from mid-March to the end of April, which is about a third of what we did all of last year. And that doesn't include the work we've done with existing clients, which numbers about 1,100, 1,200. So we've been kind of busy. Fortunately, we've got some additional resources through the CARES Act. So we have 5 new advisors that will have joined us by next Friday and trained and ready to help. So please look at us as a free, confidential resource if you do have questions. We like to rely upon SBA for official answers. We don't like to give you answers that haven't been vetted through an official source. So bear with us sometimes, bear with SBA, because there's a lot of moving parts and there's a lot of new learning that's going on every day. And once SBA gets clarity on those procedures, policies, whatever, when we hear about it, we can all be in a better position to give you the right answer and help you do the right thing, and counsel you on what will be coming down the road in terms of next steps. The last thing I wanted to mention real quick is that keep us in mind and other SBA resource partners like SCORE and Women's Business Development Centers in mind for help with recovery and reopening. When you get your PPP or whatever other loan or resources you have, and it's time to reopen, there's a lot of moving parts to that as well. We're working closely with the state about reopening guidelines, about processes that need to be followed, about training that employers need to do for their employees, and we'll be a resource, as will the chamber, on all of that. I know Diane's already started a series on reopening, which is great. So we will be happy to be an additional resource for you going forward. So thanks.
And you both have been very good resources. It's been great to work with you. The first question, I think, it goes to you, Wendell. There's quite a few of these. We need a contact person for the SBA. I have emailed and faxed every day in regards to my $10,000 EIDL loan that I never received. I've got no response from anyone. How do they contact somebody and get a response?
All right, on the EIDL, the Economic Injury Disaster Loan, so that's separate from the PPP loan. I know sometimes they do get kind of intertwined, but so that EIDL advance, let me just back up, because that's part of the ODA, the Office of Disaster Assistance. And those folks, so Mark Hayward's the acting director in Connecticut, and the folks in this office report to the OFO, the Office of Field Operations. And it's been incredibly frustrating for us as a field, including the Connecticut office, of trying to get answers sometimes out of ODA. And I'm just trying to be frank and honest with folks here today. So if you call me and you ask me, hey, what's the status of my PPP loan? I can go in the computer, I can see exactly where it is, and I can get you an answer right then and right there. And the relationship, and Joe's familiar with this, you know, the relationship that we have with small businesses in the field is we're getting back to folks on a same day basis. ODA is a little bit different. So they're operated, I believe, out of Texas and DC. These are the folks that react to disasters like him. They're still responding to Harvey, Irma, Maria. They're still responding with loans for the Tennessee tornadoes. And they're the folks that are going to be responding to the hurricanes that we're going to be getting coming down the pike. Now, I mention that only because they had existing funding. The PPP was a different funding source of over $340 billion plus 300, that's $650 billion. They were underfunded. It wasn't even close. So they ran out of funds very early in the process. That's the bad news. The good news is they just received an additional $50 billion under the CARES Act 2 that just came down, the most recent legislation. And what we have seen just in the last 7 or 8 days, and I say that with a little bit of exasperation, because the one thing that, and this is, you know, Connecticut was one of the first states in the nation to get certified to apply for EIDL applications, and folks worked really hard to get that certification. Yeah, Diane just pointed to 3. So New England had 5 of the first 6 states. So folks worked really hard to make that happen. So we have applications that date back to March 17th, March 18th, March 19th. And so that's been frustrating for us in the field. And I'm going to be frank, the communication between ODA and the OFA has been at best poor. And I know that communication with small businesses has been similarly poor. Again, in their defense, though, you know, they have received an unprecedented amount of applications. They were grossly underfunded. And so I don't mean that as an excuse. It's just a reality of where those folks are. But we have seen in just the last 7 days, my district offices in New England are reporting to me of seeing loans close. So we can't go back. We can't see the status. But what we do is when one is dispersed, it shows up in our computer system. So we are seeing activity where we hadn't seen it for 3 weeks. On the specific answer to the question on the advance, the grant portion of it. We're seeing numbers now where that's a total of a $20 billion package. Over 10 billion of that has now been sent and is in the hands of small businesses. And that number is pretty significant in New England. So you should be seeing that. And this is part of that poor communication piece with ODA. It's going to show up in your account, and there's not going to be an email. You're not going to get any communication. You know, $3,000, $4,000, whatever the amount of employees you put in on that application process, it's just going to pop in your account, and you're going to say, where the heck did that come from? Well, that's the EIDL advance, the grant portion of it. Again, it goes back to that poor communication. If you haven't received that yet, and you're one of those early applicants, you know, in March, that advance was assigned a 300 series number. You know, get that, Diane, and kick it to me, and I'll have either myself or Mark or somebody look that number up to see if we can get some visibility on that advance portion, because those things should be coming, those things should be hitting the accounts as we speak.
I muted myself. So those people that need to get a hold of you to do this, do you want to give them your office number to call or an email? How do you want them to reach you so you can look their accounts up? Because I have about 12 people here saying that they have not heard. Most of them have gotten the advance, but they haven't heard or seen of anything else since that, and they were one of the first people to apply.
Yeah, so those advances, so I think what you just said, they've gotten the advance. So that's that first stage. They are getting them out. On the loan side, we're starting to see that, but not as quickly as the advances. And just so you know, there is a difference between the PPP. That's a streamlined process. So that's the borrower certifying all kinds of different things. So there's not an underwriting process. With the Office of Disaster Assistance, those EIDL loans, that's a full-blown loan process. So they're doing credit scores, they're doing credit checks, they're doing all that loan processing and underwriting that isn't happening in PPP. We had somebody from ODA on this morning at one of my webinars, and I didn't like this answer, but I'm not going to sugarcoat anything for you folks. What they said on that webinar, the representative from ODA, was from the date the loan processor reaches out to you, they're expecting a 6 to 8 week turnaround time on those loans. I did not like that answer, but again, I'm not going to.
And it's 6 to 8 weeks from when you actually hear from a person?
Don't make me say it again. Yeah, exactly. I didn't like the 6 to 8, and I didn't like the fact that it's from when you hear from a person. So those are two strikes in my view. With that being said, a lot of our folks have been in early, and they go back to March. So those folks, we're seeing those. I think it was in Massachusetts, they're up around 63 million now in EIDL applications just over the last couple of weeks. We're starting to see those things pop, those early applications. So that's where we are with those EIDL loans. Now, I want to say one thing. That portal's closed right now. It is anticipated they're going to open up that portal when they get through some of that backlog. It is open for two folks right now. Farming business-related activities or businesses. They've opened up that portal for those folks because they were added as part of that CARES Act 2.0 or whatever number they're on now. They were farm-related businesses were not allowed to get an EIDL loan. They now are under the recent legislation. So the portal's open for those folks. There's also another subset, which is important because it's important to Connecticut and it's important to New England because we had some of the early applications. There's a small subset of folks that got a 200 level series loan. So when folks look at their loan application, 99% are going to begin with a 3. If your loan begins with a 2, you need to reach out to me, Wendell.Davis at SBA.gov. And we need to get you to reapply to get that 3 series loan. I'm being assured those are early applicants that they're going to keep their space in that line that they're in. But we do need you to reapply if you're in that subset. And unfortunately, because they're their early applications, New England's got its fair share of that subset.
Okay, well, thank you for that answer. I might not really like it, but we appreciate that. My question is regarding FTE count, full-time equivalent count. There's documentation that says that we can use our full-time equivalent count on February 15th through June 30th of 2019. versus from this year, January to February 29th. My counts in those periods are very different. I received my PPP last week and my employee count is now 9. Am I still covered for 100%? How do you figure out the full-time equivalents?
All right, I didn't hear what the numbers are, but whatever you started out with, you know, that number needs to be maintained, and that June 30th deadline, you know, there's that 8-week period that that you need to spend that money and maintain that employee payroll. With that being said, that's 75%, 25%, that's not a cliff. So if for whatever reason you can't meet that threshold, you can't hire those folks back, they won't come back. It's going to be a pro rata reduction of that, and any residual, any amount that is not forgiven, would that convert to a loan, and that loan can be paid off without penalty. There is that 1% interest rate annually, but there won't be a penalty on that. I'm not sure if that answered that
so let's just say in 2019, I had an average full-time equivalent of 8 people. But at the beginning of this year, I had 9 people because I hired an extra person. So what period of time, what number do I use for my full-time equivalents to make sure that I have that at the beginning and end of my 8-week period?
Yeah,
from last year or the beginning of this year?
You know, I'd have to go back to look at there is guidance on that. I'd have to go back. I don't know the specific answer on that. Joe, have you had to answer that question, being mindful of the guidance?
We have. Unfortunately, I don't answer them that often myself, so I don't want to speak incorrectly. But I think that, you know, if it's telling you to compare to the prior year, I would go with the prior year. If it's telling you, you know, you could use as an option January, then that's an option. But I could make a note of that and try to get a better answer from our folks, see what they've been counseling.
Okay.
Yeah, Diane, I'm a small business owner. I'm going with the one that's most favorable to me. Did you say they actually added an employee?
So if you count the time from last year, in 2019, they had 8 employees. But from the beginning of this year, January and February, they're now up to, this in particular, they're up to 12. So they hired more people, their company grew. So but right now at this current moment, he only has 9. So which number does he have to get to in order to get the forgiveness, the 8 or the 12? From last year or from this year?
Well, if it's an either, and that's where I have to look at that you know, that guidance is. I don't know if it's an either or. You know, most of the guidance is you're using that prior year, but with some categories you can use that subset.
I think what Greg Lewis and I have been kind of telling people is what did you have on February 15th? Whatever full-time equivalents you had on February 15th or when you let people go is usually a good number to pick from, because there is information all over the place that you can count different things, and the calculation that you use for the amount of money that you're going to borrow is an average of last year's salaries and wages, but it's not last year's full-time equivalents. So, you know, you get money based on last year. You might have only had 8 people. This year you have 12 people, but you can't get the money based on the 12. You're getting it on salaries based last year. So there's 2 different things. There's
Right.
wages, and then there's full-time equivalents. So
Gotcha.
the best number is on February 15th. Whatever number of full-time equivalents you had on February 15th is really what you should aim to go at. And then of course, you know, when you applied for the loan, that the loan amount that you applied for is based on your average wages per week in 2019. So they might not match up, but unfortunately that was the calculation. So I hope that.
And there was that guidance on FTEs, and we're expecting more guidance on FTEs, but there was that partial guidance saying that at the outset for the loan process, for the application, every single employee counts. So even if it's a 10-hour employee, that counts as 1, not as 1/10 or 1/4. But for purposes of forgiveness, they're not going to do it that way. They're doing the opposite, where you're going to be able to do that calculation of FTE. So I thought that was good guidance. That's favorable guidance. I think in the end, what we're seeing with everything that's coming down right now, in fact, there was new guidance today on the issue dealing with whether or not the loans are necessary. Part of that Mnuchin, you know, guidance talking about auditing companies and things, you know, very favorable guidance came down today on that. I think you're going to see favorable guidance on the FTEs also. And you're starting to see that come through. And, you know, once we get that forgiveness component, I think folks are going to be happy with that. It's going to be very expansive. It's going to be very flexible.
Okay, would one of you like to just go over some of the basic rules about what you can use the money for, the 75-25, what kinds of expenses? There are a bunch of different questions that are asking that in many different ways. How do you get 100? How do you get 100% forgiveness? Is the bottom line.
I'll start with that, and I'll jump in if you miss anything.
Well, I think, you know, the 75-25 rule is still existence. 75% payroll, 25% other. The other can be rent. It could be utilities, but not cable and TV. But I believe it could include internet service because you need that to function. It could be, it can't be mortgage payments, but it could be anything related, you know, some other related to operating expenses for that 25%. But the lion's share, obviously, is to restore, the intent is to restore payroll. So the 75% is the major use of the money, what it should be used for. Is there any specific?
And Diane, I would add.
Yeah.
Diane, I would add, I had to flip my screen to the side because I was losing my battery on my phone. But I would add that, you know, the best rule of thumb is going to be, you know, what you've done in the past, you know, the consistency through the process. So what you've done in the past, as long as you're replicating that in your payroll costs during that 8-week period, you're going to be fine. And I think the good news is when you look at the guidance on payroll and payroll costs, you know, there's a lot of specificity there. It's talking about healthcare costs. It's talking about, you know, it addresses the FICA contribution, it addresses retirement funds, but it also talks about, you know, there's one specific question that said, you know, what about temporary housing or employee housing? And for me, I wouldn't normally think of that as a payroll cost. And the answer on that guidance was yes, that is part of your payroll cost if that's what you've been doing and you're just doing that forward. So, you know, I think in the end, once we get that forgiveness guidance, it's going to be very expansive. It's going to be very forgiving, so to speak. You know, if anything, based upon the guidance today. If you're doing things during the 8-week period to get yourself to that 75% number and it's artificial, then you're taking risk. And, you know, it's almost just like filling out your tax returns. You know, there are certain things you know are deductible, and there's certain things that your accountant and your attorney and a small business owner, they're going back and forth and they're not sure about it. You know, if you're in that category, it's going to be a risk. And you know, but if you stick with what's in the actual rules and the guidance, you're going to be fine, and you're gonna hit the mark. You're going to get everything forgiven.
Now, these final rules are due out when about? Do you have any idea?
Well, that's my Charlie Brown analogy. I wake up every morning thinking I'm going to get the forgiveness guidelines. I've been waiting for these for 3 weeks. I know you guys have been waiting for probably longer, but every morning I wake up and I feel like Lucy's pulled that football out from under me and it's not there. So, you know, I'm hopeful. I was hopeful we're going to get it on Monday. I'm hopeful we're going to get it tomorrow or Friday. I just don't know. I wish we had it. With that being said, though, there's some pretty good guidance there. And I know there are really clever folks. I've done webinars with accountants. I've done webinars with attorneys, and they ask, they're really good questions. But your payroll from before, your payroll costs from before, you know, that's what the program's for, and that's going to be covered. You're going to be in a good spot if you document it, if you have documentation, you know, from before the 8 weeks, and it's consistent through this 8 weeks, you're going to be in a good spot. If you deviate from that, if you're trying to get cute, you're trying to add things, if you're adding bonuses just so you can get that 75%, you're taking a risk.
So another question was, if I had 8 employees before and I had to furlough them and now I'm trying to get them to come back, first of all, do I have to have the same exact 8 people or just 8 full-time equivalents? Do I have to keep them at the same rate of pay, the same hours per week?
Now, it's a great question, and there was some guidance on this. I'm going to give you the guidance, and I'm going to give you unofficial guidance that you can't rely upon. And I'm hopeful it's going to show up in the final guidance. So, you know, the guidance talked about that. It talked about the, you know, we know that there's folks out there where, one, they can't even bring their employees back because of the shelter-in-place rules. And the SBA understands that, Treasury understands that, and there's no work requirement in this legislation. And I know that's counterintuitive for small businesses, but your employees don't actually have to be working. And the reason behind that, I think it's important to have the reason, and I think you'll understand why that's the case. You know, the goal of this program is to get folks from point A to point B. And nobody knows what that point B is going to look like, but you know, everybody's hopeful that at that point we're part of that economic recovery. We're opening up our businesses, we have revenue coming in. But for that 8-week period, we want folks to maintain that employer-employee relationship. We want that structure still in place. We want the status quo to maintain as best as we can through this process. So even if they're not working, you can pay those employees. And if you pay those employees, the payroll and those payroll costs will be forgiven, whether they're working or not. So there's no work requirement. I get it. That's counterintuitive, but that's the reason behind this program. It's a paycheck protection program. So with respect to those folks that decline and don't want to come back to work, and it may be because the unemployment insurance, they're making more off of that than what they were under salary. You know, for an economist, they refer to that as moral hazard, where you have government programs that are incentivizing folks to make a choice that's short-term and not long-term. You know, with respect to that, there is guidance out there saying that, and I think it's favorable for employers. If the employer notifies their employee in writing, their position's available, their salary is going to be the same as it was before, and that employee declines to come back, then two things are going to happen. One, they're going to jeopardize their unemployment with the state. And two, and this is what's favorable for the small business, that amount is not going to be held against that employer, and it's not going to be used to reduce the forgiveness or any other part of that calculation that goes to forgiveness. That's the guidance. I'm going to now give you the unofficial guidance. So we had a NAGLE seminar this week, which is the National Association of Guaranteed Government Lending folks. And there were some SBA folks who know this stuff inside out that mentioned that small business owner, that amount is going to be forgiven. So not just not counted against the equation, but that amount's going to be forgiven, with the hope that that small business owner will then use those funds to either hire somebody else or use it for other payroll related items. So that's what I'm hoping we see, because I heard it. It's not part of the official guidance, but I'm hoping we see that ultimately once we get the further guidance. Again, everything I'm hearing is very expansive forgiveness, very flexible forgiveness. Again, I want to see it in writing like you folks want to, but you know, all the indications are it's going to be that way. That's what the program's for.
But it's an easy solution. Just hire someone else and have them come back and work for you.
Absolutely. There's no requirement to be the same person. You're gonna get that forgiveness. It's all about payroll.
Okay, it's all about payroll. I'm looking for information on how to get the 30-year low interest. Now that these guidelines from the state have come out and they're requiring me to have barriers and buy all this equipment that is very expensive, where can I go to get the 30-year low interest loan in order to be able to buy some of those capital investments or other expenses other than payroll and utilities?
And I'm assuming that's a reference to the EIDL program, the Economic
Disaster
Loan Program. So unfortunately, right now, that's the one with the big backlog. And it's only open. The portal's only open right now for two categories that I mentioned earlier, the ag-related businesses, so the farm businesses, and those folks with the 200 level series. I would urge everybody, I mean, Diane, I've been following, I get all your emails, you have the latest updates, and you have tons of information. So I would urge folks to, to keep reading those bulletins you're putting out. And as soon as we get more information, when that portal opens, I mean, Diane, you're going to be one of the first to know, so you can get it out to your memberships to make sure that they're ready to file again. That program right now is set to expire at the end of December.
Okay.
So that has kind of a long runway. And a lot of it's going to come down to funding too. So we'll see that component of it in terms of the funding also. So there's different variables associated with that program.
So the person that was hoping to get that soon so they could open up their business is not going to be getting it soon. So they need to look for something else.
Yes. So the SBA does have a kind of gap lending. It's a $25,000 kind of bridge gap loan that you can do through the banks that are the SBA's preferred lenders. We still have our 7A program for capital. Treasury's coming out with a Main Street USA program. That's a little bit more mid-market, folks. That's going to have the smallest amount of that loan is $500,000, and it goes up pretty high. That is a liquidity type lending, finance, access to capital for folks. But yeah, the EIDL program is going to take some time.
Okay. The PPP loan application required that we include any EIDL request in the final calculation for the PPP. Why? We applied separately for the EIDL and have received the auto deposit for that advance. But why? How is that? Is it being taken out of the PPP request, and how is that working?
Yeah, it's not required, but this is what you can't do. You can't get both payroll costs from EIDL and from PPP. So you can't double dip. So if you've got payroll related money in your calculations for EIDL and you then apply for PPP, you're going to have to refinance. Well, if you want to get forgiveness, you're going to have to refinance that EIDL out so you can get the forgiveness under the PPP loan. Does that make sense?
It does to me. I think, so if we're looking for the advance, up to $10,000, depending on number of employees. So you got a $3,000 advance. If you use that for things that you're not using the PPP for, so strictly use PPP for payroll and utilities, you can now use the EIDL advance for things like mortgage and rent.
Yeah, advance, we need to separate the advance out. There are no restrictions on advance. If you apply for a PPP, you back out the advance because the advance does not have to be repaid.
When you say back out the advance, I think that's what people are saying. What does that mean? So if I got a PPP,
that's not part of the PPP process. It's completely separate.
Okay, that was very confusing during the PPP process because it said on there, it's going to be taken out of the PPP or something. So I think people were very confused what the language was. So it should not affect the advance. Should not affect your money for PPP. Okay. Are the utilities and the other covered bills under the 25%, do they have to be incurred no earlier than the loan origination date, even though we couldn't pay them because we were closed before that? Or can it go retro for some bills that were not paid before they got the loan?
So right now we're working with just that 8-week period, and that's a hard and fast rule. I understand that your payroll may start, you may get the loans dispersed in the middle of your payroll period. You're going to have to document, you're going to have to maintain records because you may have to, what you lose on the front end, you may have to pick up on the back end. Ultimately, you're going to have an 8-week window that you may have to apportion out. With that being said, I fully expect and anticipate, and we'll see with the guidance on that forgiveness, that's going to be part of that forgiveness piece. My hope is, and I expect that there's going to be some flexibility on that. But just in case, maintain those records. If you got to portion out and you got to pro rata stuff, you may have to do that. So be ready to do that.
Okay. So if I got my PPP today, let's say on May 13th, but my business has been closed since March 1st, and I haven't been able to pay my bills because I have no income, we can use the 25% to pay a utility bill from March and April, or just the month of May when I got my loan. So
the PPP program is looking at that 8-week window.
Yeah.
And that's what we're looking at. We fully expect and we hope that there's going to be flexibility with that window, but right now there isn't. So that's where we're looking at forgiveness again.
So it has to be it has to be, expenses that occurred during that 8-week period. Those are the only ones you can pay with that money.
Right now. Okay. Yeah, I don't want to mislead folks, and be prepared to do a pro rata portion for that 8-week. Like you may have payroll that, ends on Friday. You may be picking up 3 days, Wednesday, Thursday, Friday this week. And then at the end of that 8 weeks, you're going to pick up the payroll at the end. But you're going to have an 8-week period of payroll or utilities or rent or whatever that is. Now, I hope there's going to be flexibility on that, but we'll see.
And Wendell, one more time, the 8 weeks starts when you get the funds dispersed.
Correct.
Not when you're getting notice of approval. With PPP, you're just getting the money in an account, right? So they get the funds dispersed and the clock starts.
And the clock is starting to tick on that date.
Right. Okay.
So for purposes of forgiveness, is it okay to adjust your pay periods to maximize the amount forgiven? Can we give employees bonuses to also maximize the amount forgiven?
You know, I think that's essentially what I'm saying. I mean, if you adjust your payroll, what you're doing is you're accounting for that 8-week period. Again, whether you want to prorata that portion and not switch everything or switch everything up, I think in the end it's going to be the same. And again, if you're doing it for purposes, and I don't think the question is going there to get to that 75% or somehow get more than what you would in that 8-week period, then it's no, but I don't think that's where the question is going. So I would say yes, but I don't think you have to do that. I don't think you have to switch up your payroll for that.
I think as long as it's something fair. I mean, I know that we've been saying to people, you may have to encourage people to come back to work with the $600 to stay home. So you might give them a come back to work $500 bonus, but it just cannot be something ridiculous. Like you cannot bring back 2 out of your 9 employees and give them each $10,000 bonuses, especially if they're your mother and your father-in-law. You know, you've got to avoid.
I mean, the best rule of thumb I can give you is what you've done in the past. If you're just merely going through your 8-week period like you did in the past, you're not going to have any problems. Bonus is something that's not specifically in the guidance. There's hope that that's going to be addressed in the guidance, but if you're doing it to meet that 75%, you know, it's not going to be approved. Again, you're in that risk portion of it. I mean, it is clear what is covered. That's not in there. Hopefully it's in the guidance. We'll see, because, you know, even on that last thing where you're talking about the $600 bonus to get somebody to come back, they're obligated to come back under, you know, under unemployment rules. And the guidance clearly states that if you put a letter out there and they don't come back and they tell you we're not coming back in writing, then that portion that's been allocated to that employee as part of your application is going to be forgiven. It's not going to be used against that employer to reduce that amount.
And I got a message from Mark Hayward, Hayward is here on the call. Mark, are you able to talk to us, or did you not get the panelist link? I'm not sure. I don't think he has a panelist link.
Mark can't talk. Mark is good because he corrects me when I make mistakes.
Well, I apologize for that, Mark. I think that Steve sent you a link to make you a panelist. If you can look in your emails, you might be able to sign back on that way. Joe, did you have anything you wanted to add?
No, I think there was a little bit of confusion in the beginning about the 8 weeks and when it started, but it's good to hear clarification, especially now that so many more people are getting their loans, and to know what time period they need to be adjusting to, or dealing with.
And it is possible to use more than 75% on your wages and payroll, correct?
Absolutely.
Mm-hmm. Yeah.
Okay. Someone else was also asking, you had said that you could use other operational expenses that could be included in the 25%. Can you clarify what the 25% for PPP can only be spent on?
Well, I think it's a broad category. I mean, operational expenses could typically include those out-of-pocket utilities and rent. You can actually pay a mortgage, not, I'm sorry, I just sent that around and I've already forgotten what I said 5 minutes ago, but you could pay some of your expenses on your rent and mortgage payments, but you can't include, you know, certain utilities that are personal. You can cover phone if it's related to your business, internet, things like that. You can pay mortgage interest, not the principal, I'm sorry. You can pay some health and leave benefits as part of your payroll cost. And you can include, you know, salary, wage, cash tip or equivalent, payment for vacation, etc. You can't include in payroll taxes, income taxes, anybody whose principal residence is outside the U.S., and of course anything over 100,000 in annual salary. So those are pretty much the restrictions. I'm not sure what other costs might come out of operating. I think if there's any doubt, refer to IRS guidelines for operating. Now, you know, we're kind of going by whatever the IRS considers operating expenses or qualified expenses from an IRS perspective.
Okay, I have another couple of questions here. I'm sorry, let me get to them.
Diane, can you hear me now?
I can, Mark. How are you? Do you want to say hi to everybody?
Hi, everyone. It's great to be here. No, Wendell, you're doing a good job. Yes, for some odd reason, I had to go back out and come back in and put in a different code, but I'm here. I apologize for that.
All righty. So here's another question. Do partners in a partnership, so a non-employee, right, a partner in a partnership, do they count in the FTE calculation?
Let's throw that to Mark.
So I'm assuming that they apply, they're applying as a K1?
Yes.
Okay, so they would be individual. So the K1s would be individual, and then it would be apportioned appropriately.
Okay, can you say that a little bit one more time?
So if your distribution is $10,000, and then it would be calculated based on that 10,000. Remember, we're going through its total divided by 12 times 2.5. And then whatever that would be, let's say it's 25,000, then it would be apportioned appropriately based upon the K1. Because remember, there are two things that on a sole proprietor, we're looking at the line 31 on the Schedule C, and for partnerships, we're looking at the K1 as being the salary contribution.
Okay. But so just to reiterate, but they count as as part of the FTE calculation. That was the question.
It depends on how they're filing it, but more than likely, yes.
Okay.
And it would be the K1 for, I saw the question there, would be the K1 for tax year 2020. So it'd be the 2019 K1.
Okay.
Yeah, Diane, there's a really good tool on the Treasury's website, and you know, a lot of the stuff you have to read 8 times over to figure out what the heck's going on. But this one thing it's called How to Calculate Maximum Loan Amounts by Business Type. And they go in there and they show what's eligible and what's eligible for forgiveness. And they break it down by if you're self-employed, if you're a subchapter S, if you're a partnership, if you're an LLC, if you're an independent contractor, and they literally point to what line on the tax return you're eligible for. Not only for the application, but for forgiveness. And, you know, that's something, Diane, if you email me, I can forward it on to you, but it is on Treasury's website. It's one of the more useful documents that are out there.
And I think we have that on our website too for people to look at. Here's a simple question, let's say. So if I received my EIDL advance, but I declined the loan, I'm just going to keep the advance. Can I just keep the advance? And can I use it for anything? Is there going to be any specific paperwork or proof how I used it? Is there going to be that?
I really like that question, Diane. That's a yes, yes, and yes. It's yours.
You get to keep it.
Keep it. You can decline the loan.
Wendell, we kind of lost you there. We can keep it in what?
Oh, you can keep it. You can decline the loan. You can keep it. No strings attached. It's yours.
That's a good answer.
Yeah, that's why I jumped in.
So again, back to the PPP loan forgiveness. Will I only be forgiven if I rehire all my employees for the same wage they had, or only if I have my employees working now, will I be able to get the amount I paid for payroll forgiveness? I have no idea exactly what that question means. That grammatically doesn't make sense. But basically, what does wages have to do with this? Can I rehire them at the same amount? Can I give them extra? I think what she's saying is she has only half of her employees now, so can she pay them more than their normal wages to meet that 75%?
I think you get a penalty if you don't have the head count and a penalty if you don't have the payroll. So I think it's a ratio. I don't know if Wendell, Mark want to chime in on that.
So technically you have to have the number of people that you had back onto the payroll. If they decide not to come on because they're staying on unemployment, so to speak, then you need to have some kind of documentation that the job was offered back. They refused to come back, and then forgiveness would still be applied. Because there's no cliff, you still have to adjust the 75-25. So what you're paying people really is not germane. You just, if you get 10,000, 7,500's got to go to payroll. $2,500 can go to other expenses.
Okay. And just to clarify with a couple more questions here, that 25% is utilities, rent, or interest on the mortgage. So things like credit card payments or purchasing restaurant supplies would not be included, would not be reasonable uses of the 25% if you want to be forgiven. Is that correct?
I don't know what forgiveness looks like, so I can't answer the question. I mean, I got to believe that it's going to be a little bit broader than just those two categories. But again, without any really definitive forgiveness rules, it's a little bit difficult for us to be able to give that.
Yeah, the initial guidance was you can't use it to make up lost revenue or lost wages for yourself if you're an owner, but it's not really very clear about what else goes into operating expenses. I would think supplies would, personally, but you know, I'm not the final word on that by any stretch. So
I agree.
Okay, so if you applied for what you thought was the EIDL advance 10,000, that automatically gets you in line for the 30-year loan, correct? They're going to contact you at some point. Yes.
Well, let's hope.
Yeah, that's part of the application process, Diane. That you apply for the advance, you apply for the loan.
Right. And again, just to clarify, someone got their advance in their bank account and it just said SBA account with a loan number. And they were sent an email giving them the option of taking out another loan under the EIDL application number up to 25,000. This is a loan, correct? This is not any forgiveness. This is different and it's a loan. It's the actual EIDL loan.
That's correct.
Right. So they might have gotten their advance of 3,000 or whatever for their 3 employees, and it showed up in their bank, but then they got another communication somehow that says that they have the option of taking out an additional $25,000 under that same loan number. So they wanted to make sure that it's not like an additional free $25,000 part of the advance. It would be the loan part. So you get one loan number, and that's used for both the advance and the actual loan.
We're assuming yes.
Okay. Owner draws. Is that a qualified expense under the PPP?
Yes.
That's their salary is included.
Yes.
It is. And that can be forgiven. So that goes back to that document, which makes that really clear. And a lot of folks are getting confused on that owner's draw is applicable. Now, you know, in some of the instances, it's your net profit. So it depends on what line we're talking about that carries over from the K-1 to your tax return. But if you go to that form, you'll be able to see exactly what you can apply for. But yes, in general, it is applicable.
So this I think is kind of the same exact thing, but a self-employed person. So as a self-employed, they applied for a PPP, they got some amount of money, and they want to know how forgiveness is calculated if you don't have any employees on the payroll. You got money because you calculated somebody on your payroll, which must have been you, correct?
Right.
The
That's
owner.
exactly right. Yeah.
Exactly right.
So you have to pay yourself that same amount up to the 75%.
Minimum of 75%. They can pay themselves 100% if they want.
I'm sorry, I meant the minimum of 75, right? So those two questions I think were kind of the same.
Yeah, there'd be no reason I can't think of that they wouldn't max out their salary at 100%. It's forgivable.
I think most of the other questions that I've reviewed, if somebody has any more, please send them out. But I'm thinking that most of these are similar and that you've covered them. What I want you all to look into your crystal balls and give us some idea of where you think we're going to go from here. There's other bills out there potentially for additional funding. Do you think that there will be any other programs for small businesses? Do you think there'll be any other, I'm just going to say it very directly, any other free money anywhere? Because a lot of our small businesses don't want to get into additional debt and get loans, but they are looking for some assistance. Any thoughts, any ideas?
Diane, I'll answer it generically. You know, there are certain restrictions in terms of, you know, we're a federal executive agency. So it's our job to take what Congress does and implement and execute. So it's a different lane for those folks. They're the policymakers. They're the ones that have to make those decisions, and then we'll execute on those programs. With that being said, I know there's some state programs out there, and obviously folks can read the legislation, but that's just pending legislation. I did mention the Main Street USA program through Treasury. That is a lending facility. That's a liquidity. If you have a liquidity issue, you may want to take a look at that. That's a short-term liquidity fix. You may want to take a look at that. The EDA through Commerce came out with some grants for municipalities to help out with economic development. So we could talk about what's out there, but the policymakers really have to weigh in on that crystal ball stuff. Mark, are there other areas too that may be concrete? I know we have some programs and recent announcements.
Yeah, no, I think you hit it. You're absolutely right. I mean, we can't speculate as to what Congress will or will not do. It would be inappropriate for us to do that. All we can do is administer the programs that we have.
Well, I have one last question that came in. What happens if you don't spend all the money? Do you give it back, and is it still forgiven? And maybe you want to talk about the May 14th deadline.
Well, I don't think May 14th. May 14th is not. It's whether or not it's a safe harbor. If you want to give everything back, you can. But you know, we go back to: is there a cliff? Is there not a cliff? I do not believe there's a cliff, based upon the fact that there is language that would indicate there is not. But when you look at that, let's say it's $10,000 and $7,500 has to be spent on salaries and $2,500 on other. If you only spend $6,000 on salaries, then that's 80%. Then you can only spend 80% on other. So then you end up technically with $2,000. Do you want to give it back? You can. You can pay it off. But you know, somebody said to me, "Well, what can I use it for?" Remember, when you close the loan, there was certain specific proceeds that it had to be used for. I don't believe that changes. So there's a lot of questions we don't have answers to yet.
Right. So I think what people need to understand is, if you're borrowing the $10,000 and let's say for you pay out your 75 to your employees and you're paying your utilities and such in the 25 and you don't use it all up, well, then it becomes a loan. But if you don't need it, you can return it, and then you've paid off your loan. So you won't have a loan to go forward. And if your payroll doesn't get to the 75%, you will still get some forgiveness, but you will not get 100% forgiveness. And you have some fancy calculation that we don't need to go into somehow on how that will be calculated. But you know, it's not an all or nothing. If you do the 75%, spend 75 on payroll things, 25% on the proper expenses like utilities, you'll get 100% in theory forgiven. If you don't meet those qualifications, it's not like you don't get any of it forgiven. You'll just get in some percentage, right? Some degree of forgiveness.
That's the way I look at it.
Yeah, Diane, that is correct. I think another way to look at it, saying the same thing in a different way, is that in a worst case scenario, you know, absent, you know, fraud, in a worst case scenario, you have a loan that you can pay back without penalty.
Okay. And last quick thing, Wendell, you said today there was some new guidelines or clarifications on what was that? Do you want to go over that? You don't remember?
Yeah, so in response to some of those high-profile media applicants that receive loans, you know, the Harvards, the Los Angeles Lakers of the world, those folks, you know, there was guidance that was given out by Secretary Mnuchin talking about, hey, you know, not only do you have to be impacted by COVID-19, because we've all been impacted by COVID-19, but this loan needs to be necessary. And so that kind of raised a stir amongst a lot of different companies. Okay, what does necessary mean? Because the legislation dispensed with the credit elsewhere requirement. And now folks were kind of looking at, well, what if I do have access to capital markets or different accesses to capital, whether it be a line of credit or something like that? There were all these questions that were put out there. And just today, there was more guidance given on that. And what they essentially said that is, if your loan is below $2 million, there's this kind of this notion of a safe harbor where it's going to be presumed that you needed those funds for the the intended purposes of the program. And part of that guidance talks about there's a presumption with loans under $2 million that those companies, there's a presumption that they didn't have access to those capital markets and liquidity that those folks above $2 million are going to be presumed to have, and they're going to get audited. So they made it clear if you're under $2 million, you're not falling into that same category or that same, target's probably not the best word to use, but that same audit requirement that's going to be the folks above $2 million. I thought that was really good guidance for small businesses. They don't have to worry like they were over that necessary definition. It's presumed it's necessary.
Okay. I think most of these questions have been answered. A couple more specifics. I think these are pretty simple. I can answer. So I want to thank you guys for taking time out, and I'll send you goodwill, blessings. I'll make sure we get rid of the target on your back because, you have said it, but to just reiterate to all of our friends out there listening to this, you did not make the rules. The rules were made by legislators. They voted on it. They agreed to spend the money and told you how to spend the money. All you guys are the administrators who are taking that information and creating plans out of thin air with no notice and doing the best that you can to meet what you think is what the law was written for. So you didn't create this. The legislators did. You're just administering it. So
Diane, with that being said, though, there is good guidance out there, right? So if you stick with payroll and you stick with payroll costs and utilities and mortgage interest and rent, if you stick with that, you're going to be fine getting through this program. There's a good faith component to it. If you document the heck out of everything and you can show this is what you did before and you're coming through this 8-week period, it's the same thing, you're going to be fine. I don't want folks to overthink that. As you get more creative, you're taking a little bit more risk. That's just the nature of the beast. And it's, consistent, as I said before, with kind of doing your taxes. You can get an accountant to kind of come up creatively. Can we fit this in here? If you're going to do that, there's a little bit of risk. The loan's not going to be, that portion's not going to be forgiven.
Right.
So there's pretty good guidance out there already for small businesses to operate under, and I hope we can reach as many people because I know we're not reaching everybody. I would, in final state also, though, I would emphasize, Joe's on the phone, our SBDC folks, our Women's Business Center, our SCORE folks. You don't have to do this alone. There's a lot of people out there that can help you with this. So if you do have those questions, Diane, all those resources. You can point your members to some of our resource partners out there. And again, you don't have to do it alone. We can do it with you.
Well, you took my last line, Wendell.
Oh, sorry.
I was going to say that we work very closely with the Women's Business Development Center and the SBDC. Like Greg Lewis and I are on the phone almost every day about things and questions and comparing notes, and Laura at the Women's Business Development Center and Fran. So please, if you have any questions and you can't remember or don't know how to get a hold of anybody, you can always call the chamber or email us and we'll get you to the right people. I want to end by saying you've all been amazingly responsive, thinking about the millions of people that you're dealing with and thousands of issues and complaints. My last comment was really about, because people say, well, why can't the SBA give us money? Well, because they don't write the rules. The rules came from legislation. Even the chamber got left out of the last funding source, but we don't hold it against you, Wendell. We still love you.
Hey, I'm still fighting people on that.
It wasn't you who made those rules, and that was kind of my point. But the fact that you all are very responsive, you answer emails, you answer our phone calls, we really, really appreciate you for doing that, because it's not across the board. So thank you, gentlemen, for coming. It's been wonderful. Thank all of you for listening. This will be recorded and will be on our website. And please join us for our upcoming webinars on reopening Connecticut. What that means, we have a really awesome one on Friday with SBDC. That will be Matt and Greg. They're going to do some financial analysis for you so that you get an idea of what these guidelines are going to cost your business and some of the other things you need to think about before reopening. So again, thank you all for coming. Have a great day.
Thanks, Diane.
Thank you, Diane.